Stocks trade range, but the market breadth is distinctly positive. Energy and utilities lead gains, while IT and auto drag.
Tega Industries inks a term sheet to buy global grinding media player Molycorp at an enterprise value of $1.5 billion. Tega will raise equity and debt to buy a 77% stake with Apollo Global, pitching in for the remaining 23%. The big bet will scale Tega's revenues to about 9 times, but also add $1 billion in debt.
Prominent lender Cholamandalam Investment flags rising stress in the unsecured segment as well as in vehicle financing. An extension of the monsoon may push stress up further, adds Arun Selvan, who's the CFO.
Automakers see a bumper festive season ahead following the GST rate cuts. Given the rise in inquiries, Maruti and Hyundai bet that small car sales will see a pickup, with Hyundai expecting a sharp increase in first-time buyers. Good afternoon, you're with us here on Business Lunch. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Hormuz Fatakia. With me as always is Vamakshi Dhuria. Vamakshi, good afternoon. You know, we are still at that 25,000 mark for the index, and it's the weekly expiry of the Sensex contracts, the BSE contracts today. And if you can see, the index has done precious little today. It's traded in a very, very narrow range all through the trading session, and it has not seen any significant directional move. The only impetus will be the fact that it has to hold on to that 25,000 mark. The trading range for the entire day has been just 55 points for the Nifty. It's been that kind of a day for the benchmark index today. But the broader markets, though, they are the ones that are seeing intense stock-specific activity. The mid-cap index too doing precious little. The small-cap index also seeing maybe slightly better price action compared to the Nifty and the mid-caps, but that too has given up most of its gains. All of them trading at the flat line today. But if you take a look at stock-specific activities, just pull up GMDC and the fall that it has seen from the intraday high. If we can pull up the from day's high graphic, and you can see the fall that the stock has had from the highs of the day, 4% lower on the stock right now. But the fact is that it has corrected 13% from the intraday highs in a matter of minutes. At the highest point of the day is around 570, and now within minutes the stock has shaved off 70 rupees, is now down to 500 levels, now 4% lower on GMDC and counting. What is also not doing well though are the capital market names BSE and Angel One. That is, of course, after the exclusive that Yash broke a couple of hours earlier with regards to the SEBI consultation paper. BSE down 4, Angel One down 4.5 as well. But the big story of last evening, which has translated into this morning as well, is Tega Industries. The big acquisition of Molycorp, which they will acquire as part of a joint venture with Apollo Funds. Vamakshi has hopped over to the wall to give us more details. How much is the money that's going to be putting in? How will that be funded? And so on and so forth. Lots of details in there, Vamakshi.
Absolutely, Hormuz. You know, Tega Industries just announced its boldest move yet. Now, teaming up with Apollo Funds, Tega will acquire 100% of Molycorp for an enterprise value of $1.48 billion. That's over 13,000 crore rupees. Now, Tega's own market cap as of close yesterday was 13,800 crore rupees. Now, this buy is as big as Tega itself. But how will Tega actually fund this? Here is a breakdown. Tega will take 77% stake, while Apollo will take the remaining 23% stake in the SVB. Now, Tega will put in $361 million, which is roughly around 3,180 crore rupees, funded by a mix of corporate debt worth 995 crores and a fresh equity raise of 2,184 crores. In fact, Tega has scheduled a board meeting on September 13 to finalize the fundraising plans. Apollo, on the other hand, will put in the balance 950 odd crore rupees, and there's a contingent payout of $120 million, or 1,057 crore rupees over 45 months if the performance targets are met. So why Molycorp? Well, it makes the grinding media like steel balls, etc., that is used to extract minerals, especially gold as well as copper, while Tega, on the other hand, makes the liners and wear parts that protect those mills and optimize efficiency. Now, together, they can offer customers a complete mill solution, which translates into great cross-selling opportunities. Now, beyond just the product matchups, there's strength in the footprint as well. Tega has 10 manufacturing facilities and a strong presence in Europe, West Asia, Latin America, CIS as well as Africa, while Molycorp has 13 manufacturing facilities, 3 JVs plus a potential JV with footprint in US, Canada, Australia, LATAM as well. Now combined, they will have 26 manufacturing sites worldwide. That's not all. Let's also take a look at the numbers then. Molycorp's revenues are about 8 times that of Tega's, but the margins here are much lower at 11.5%. So the combined revenues will stand at approximately 15,200 crore rupees with a blended EBITDA margin of 12.5%. Now the good part here is that Tega is buying Molycorp at a much lower EV to EBITDA multiple, about 9 times versus its own multiple of 41 times. Now if this integration works, this could be earnings accretive, and in fact the management also said that they expect the deal to be EPS accretive in the next 3 to 4 years. But make no mistake, there are big risks involved as well. Tega is acquiring an entity that is larger than itself, spread across multiple continents. So therefore, aligning operations won't be easy. The other major concern is Molycorp's debt, which is at $1 billion. But the management is optimistic about bringing it down to $800 million. Now, the other concern is around growth itself. Molycorp's historical growth has been a modest 3 to 3.5%, and the management is expecting it to stay around that range, 3.5 to 4%, which is much slower as compared to Tega's own 15% growth trajectory. Now, additionally, Molycorp's margins are lower versus Tega, but they target an improvement to 13 to 14% levels in 2 to 3 years from 11.5% currently, and overall the combined entity could have blended margins of 18% in 3 to 4 years is what the management had said. So just to sum up this whole deal, this deal is a big, bold step for Tega, and investors will be watching closely to see if Tega can actually pull this off, because this move could either be a game-changing leap forward or a very expensive learning curve.
Only time will tell. Vamakshi, thank you for that very detailed breakdown of the biggest acquisition of Tega Industries. But the management of Cholamandalam Finance also spoke to CNBC-TV18 earlier today, and they flagged the rising stress in the unsecured segment as well as in vehicle financing. Now, they have also lowered their AUM guidance following the GST rate rationalization. Listen into what the management had to say.
Question overall, in our view, the AUM growth, we still will hold it at the 20 to 22% levels for the full year. We will be reaching this, and there should be benefit with the number of units being sold because of the reduction in GST. And while that would have a slightly lower impact on the value, so overall, we don't want to change it either positively or negatively because of the GST reduction coming into play. GST implication would, also mean lower EMI burden to the customer, which would mean it will improve credit. Just wanted to add that part to it. It has always been a case that this Q2 will always be a slow quarter because of rains, and also because it has got a fair share of the period coming under inauspicious months, etc. For the full year, the overall credit cost would be in the range of around 1.5 or even 1.6% as somewhere equivalent to last year levels. And if, God forbid, the monsoon gets extended into Q3 like it happened last year, then it can even be slightly higher.
Well, moving on to an exclusive then, sources tell CNBC-TV18 that the SEBI is set to float a consultation paper to consider ending weekly expiry contracts. Yash is here with all of the details. Yash?
Well, it was on August 21st when SEBI chairperson Tuhin Kanta Pandey had expressed the intention of having longer-term derivatives. Of course, he had said that this would be done through a proper consultation process. Now, taking that intention from market regulator SEBI forward, what we've been given to understand is that the consultation paper, when it comes to removing weekly expiry, is expected to be rolled out within the next 1 month itself. As far as the consultation paper itself is concerned, it is expected that it may suggest some sort of glide path when it comes to removing weekly expiry, where the ultimate goal for market regulator is expected to be to move towards a monthly expiry. Of course, as I said, the SEBI at this point of time is thinking in terms of what that glide path towards having a monthly expiry should be. As far as another important caveat here is concerned, what we've been given to understand from our sources is that one thought with market regulator SEBI is to have a same-day expiry for all exchanges, for NSE, BSE and any other small exchange, if it is done fortnightly or ultimately going towards the final destination of having a monthly expiry. The whole rationale behind removing weekly expiry and moving on the path towards monthly expiry is to, of course, remove speculation when it comes to the derivatives market itself. Our sources maintain that all of these steps are expected to be done in a proper consultative way. Apart from that, market regulator SEBI is also expected to look at ways in which cash market volumes can be enhanced, also ways in which retail participation in the FNO or the derivatives market can be restricted through some kind of threshold. There are various suggestions and ideas which market regulator has with respect to containing retail participation in derivatives market, and all those ideas and suggestions are expected to be considered. But as I said, any move taken either towards removing weekly expiry, moving towards that monthly destination, or containing retail participation in derivatives market would only be taken post a consultation process.
Yash, thank you very much for that very important update there, showing up on the stock prices of both BSE and Angel One. By the way, some flashes on your screen just a few seconds earlier about a block deal in Ambuja Cements. You pull up the stock before we take that break, and there's some 0.8% equity that had changed hands in just a few minutes earlier, and that's as a result of which the stock has taken a bit of a knock in the last few seconds. Almost 1900 crores worth of shares that had changed hands for Ambuja Cements, and the block deal that has taken place. Of course, we'll get to know the buyers and sellers only later in the evening, but that's the transaction that has just taken place. The stock has slumped to the lowest point of the day, 2.25% lower. Take a short break. More news and updates on the other side. Stay tuned. Welcome back. Shifting focus to autos now. The 65th SAM convention is underway, and my colleague Parikshit spoke to automakers Maruti Suzuki and Hyundai, both of which are expecting rate cuts to boost sales in the GST front, of course, especially in the small cars. They are also expecting a bumper festive season ahead. Let's listen in to both of them.
I think this is a very big reform which is happening from 22nd of September. It is not only kickstart the auto industry, but across all other industries also. Everybody is going to benefit, and the common man is going to be a big beneficiary. On the top of it, I think the two more things I would like to bring in the knowledge is, one, the benefit which was passed on through the income tax by the Honorable Finance Minister, and also I think the RBI Governor has done a very good job in terms of reducing the repo rates. So I think it's a combination now of the GST, then the benefit which is passed on through the income tax, and third is the repo rate. So I think it's going to be a bumper sales in this festival time. If we take the span of the festival of the 45 days, starting from Navratra to Diwali, at least there should be a growth of more than 20%. So small cars, we are expecting a growth of at least 10%. And overall industry, we feel earlier the CAGR used to be around 6.9 to 7%. We feel that this reform will again take us back to the industry growth of 6.9 to 7%.
The new plant is around the corner. I think come October we'll have the SOP of the Pune plant. We are all very excited because our capacity goes up from 824,000 in Chennai to now 170,000 more. So we are almost reaching close to 1 million. I think we could not have had a better timing for the Pune plant. So like I said, Q3 of financial 25-26, the Pune plant will come on stream, and the phase 1 will have 170,000 capacity, which starts kicking in right from the first month. I believe with the 10% cut in the smaller cars, it will bring in so many new customers. The first-time buyers, which Hyundai anyway is seeing a big jump. First-time buyers in 2020 used to be about 31%. Now they're at 39.5%. I believe we have a potential to go up to maybe 42, 43% in first-time buyers. So more small car selling. The second thing I think which will be much more significant is if you see the customer affordability remains the same in terms of how much he can spend. However, the car becomes cheaper, which means its initial signs, maybe the customers will now again go back to the higher trims, because last 1 year we are seeing that customers were moving down from higher trims to middle trims to lower trim. But now there's an opportunity because India is a very, very aspirational country.
Expecting a bumper festive season are the auto stocks, but we highlighted GMDC a few minutes earlier. The stock has now extended its losses, 6% lower now on the stock. And take a look at the fall that it has had from the highs of the day. 13% lower now on the stock. Mind you, the stock was up 11% last Friday, another 5% on Monday. And since then, it has had a 3-day losing streak, and it has given up all of those gains that it had on Friday and Monday, and it is now below those levels. So a significant fall seen on GMDC as we speak. But Roads and Transport Minister Nitin Gadkari also spoke out over the recent social media outrage on the government's ethanol blending program, terming it to be a paid social media campaign. Listen into what he had to say.
सुप्रीम कोर्ट में भी इसके बारे में बहुत साफ निर्णय हुआ है. अब जैसे आपकी इंडस्ट्री वैसे हमारा पॉलिटिक्स भी है, तो ये सोशल मीडिया का जो कैंपेन था वो पेड कैंपेन था, वो अगेंस्ट इथेनॉल था और पॉलिटिकली टारगेट मुझे करने के लिए था. अब मैं जवाब दूं तो ये मीडिया वाले आपके कॉन्फ्रेंस को छोड़कर वही बातें कल छापेंगे. तो मैं इतना ही कहूंगा कि वो जो कुछ था उसमें कोई तथ्य नहीं था, सब बातें क्लियर हुई है.
Well, on that note, let's slip into a very short break for now. More news and updates follow on the other side, so don't go anywhere. Welcome back. You're watching Business Lunch on CNBC-TV18. Now, in the latest on the Russia-Ukraine front, the president of the European Commission has spoken on the ongoing war, saying Europe will stand in full solidarity with Poland and calls for more sanctions on Russia. Listen in.
Europe stands in full solidarity with Poland. Putin's message is clear, and our response must be clear too. We need more pressure on Russia to come to the negotiation table. We need more sanctions. We are now working on the 19th package in coordination with partners. We're particularly looking at phasing out Russian fossil fuels faster. We're looking at the shadow fleet and at third countries.
Well, that's the European Commission president calling in for more sanctions on Russia, but putting the spotlight on the Federal Reserve. Then let's also listen in to what David Solomon, who's the chairman and CEO at Goldman Sachs, had to say on the central bank's independence and his thoughts on the next moves by the Fed.
First of all, I think that central bank independence, not just here but around the world, has served us well. And I think it's very, very important. I think Fed independence is very, very important around monetary policy. I think the people who are in the Fed and make these decisions, and by the way, it's not an individual, it's a committee of people that vote, I think they take it incredibly seriously. And I think as you look forward and you look at appointments, and by the way, we saw Stephen Murrin at his hearing talk about the fact that he thought Fed independence on monetary policy was very, very important. So presidents and administrations throughout history have had a point of view about policy rates, and they voice them. The people that go and act on monetary policy, I think, do it to a very high standard, and I'm confident that they're going to continue to do it. But I think it's important for all of us to appreciate how well central bank independence has served us. There's no question that when you look at the labor numbers, there's a little bit of softening, and I'm pretty confident that we'll have a 25 basis point cut. Whether or not we have a 50 basis point cut, I don't think that's probably in the cards. So I would expect a 25 basis point cut, and I think you could see one or two other cuts, depending on how economic conditions play out from here. But there's no question we're going to see a slight change, in the policy rate as we move into the fall. And I think it'll be really data dependent on how things evolve as we go through the rest of the fall as to how that plays out.
Well, David also spoke about the US President's tariff policies, trade negotiations, and how it's impacting growth of the US economy. Listen in.
I think about where we are, there's still more work to do. And so, I think it's uncertain. I've said it a number of times, I think there's going to be a stickiness around how this all settles out. And I think we're continuing to see indications that that's something to watch very closely. So trade policy is still getting negotiated. It's still getting implemented. The administration has a clear point of view, but there's uncertainty around where this all lands. And there's no question in my mind that it's having an impact on growth. That impact on growth is hard to quantify specifically, and I think it's also very dependent on where a lot of this lands. There's obviously litigation now going on around some of the reciprocal tariffs. We have to watch that closely. There's still trade deals that have to be negotiated, particularly here in North America. So I'd say there's still uncertainty. There is an impact to growth.
Well, that's all we have on this edition of Business Lunch. Don't go anywhere. Midcap Radar comes up next.